Okay, hello traders, and welcome to this live intraday strategy webinar. Today is Tuesday, September 14th. Mike Boutros with you on the horn, guys. Good to be with you. Jay, Steve, Ted, everyone in the room here. It's been a slow start to the week. We just got the release of core inflation numbers coming in at 4% for the US. Okay, the forecast was 4.2, so it's a little bit weaker than expected, which is a good thing. Inflation rate headline year over year coming in at 5.3, so right in line with expectations. Again, 5.3 is a super high number, but with the Fed's transitory commentary, it's basically at forecast. So we'll see if this does hit the dollar. All things held constant, a core inflation read coming in below expectations is a positive thing for the economy. For the dollar as it stands, it's still at risk, right, for the pullback as we noted yesterday. So for the menu today, we're going to go over DXY. There's not a lot of movement in some of these other majors, but we'll go over Euro, Dollar CAD, Gold, Aussie dollar, Sterling dollar, Bitcoin and Ethereum from last night, both on support, seeing a bounce today. Kiwi, Aussie yen, and a look at oil. Any other questions or trade setups, as always, feel free to throw them at the message board at any time. So let's jump right in. Here's what the dollar looked like on the 9th. Okay, we had already made that stretch into the 50% retracement. We'd already pulled back, and we were essentially looking for that exhaustion high into the close of last week. We opened up this week with another run at it, and then we failed again. Here's what it looks like on the daily chart. Take it to the weekly first. So obviously weekly, there's not much here, right? You're not really at support, not really at resistance. Could have got a little bit higher. So the weekly chart, 50 momentum, not much to be favored there. Daily chart has a very clean monthly opening range right below that 50. So 92.83 on the upside. I chalk up to 92 on the downside there. So the range is set. We came off of, well, we didn't quite make it into uptrend support, but here's the bounce and failure. 618 of the monthly range is 92.29. That's now near-term support. Here's what the scalp looks like. And here's what it looked like, again, back on the 9th. So we came back here. We were looking for entries along that wire. I didn't quite get it, right? There was a nice entry here, but missed this one. Here's the rally, failure once again, right at that 50. Break back below the September open yesterday, just saw a tag of that as resistance. So as we were noting, risk for a little bit of a pullback here, 92.29, 92.11. If we do get the break, both areas of interest for possible downside exhaustion, but the risk is still there for that near-term correction in the dollar. So at this point, resistance still 92.66. The weekly open comes in just ahead of that, 92.60, but that's your near-term resistance. Bearish invalidation now drops to this week's high, and we're looking for reactions at 92.29 or 92 on this way down here. Questions on DXY? So a moderating CPI number is going to be something that are going to be favored, right, in the markets. As you can see here, here's the SPX with a nice little rally on the back of this print. It's going to be interesting to see whether good news is bad or bad news is good, right? If we look at this from a fundamental backdrop, slowing inflation or moderating inflation takes the urge off them having to normalize so quickly, right? That was kind of the urge. Oh, this is not transitory, it's running pretty hot. I still personally think we are going to be seeing inflation kind of be a little bit more sticky than the Fed anticipates. But near term, might be a little bit of a lift here for risk assets. So keep that in mind. Questions on DXY? All right, number 2, here's what Euro looks like as we open up this session. You know, I'm kind of a little teed off. There was an opportunity here on the pullback. It looked like it just really wanted to see that rip, 1856. We talked about this in the update back from last night, or this was back on the 12th, excuse me. Here was support. If you guys remember on the short last week, that's kind of where I tapered out the rest of it. Looking for a reset, you know, rally back towards one of these levels to fade again. Here's the open of the week. We buckled right back below, failed. Here's the buckle back above. So 1859, 1866, both areas of interest on the long side. That's the 618 of the drop. That's the objective August open. So both of those regions basically converge on the median line over the next 2 days. So we're looking for some sort of inflection here on the rally. If it breaches, you're basically risking another run to the July high. Okay, but right now the immediate focus is we're looking for a reaction in this region between 1855 and 1866. You do get some, into the end of the week, we still get Eurozone inflation, right? On the 17th, the core inflation read is supposed to come in at 1.6%. That's from our previous read of 0.7. So an increase there expected. That prints on Friday for Euro. All right, any questions on this? Again, we just finally got the move here this morning on the back of this print. Looking for 1855, 1866. Near-term support now comes in right back in this zone at 1810 is the weekly open. So just keep that in mind. That's kind of where you want the support to call it quits. I'd actually probably just drop that extension at this point. Keep your eyes on this. All right, that is Euro. Number 3 here is dollar CAD. So dollar CAD has been in this real tight, sort of stuck just below the 2021 yearly open. It's exactly where we failed last week, closed right back below it. Again, weekly chart, nothing there. Daily chart looks like this. Weekly open, still resistance. Monthly open support being tested now. Okay, that is 2614, 2615. We're there right now. Here's what the intraday chart looks like. So this is kind of a big pivot for me. And just as we're looking for that exhaustion in the euro and the exhaustion in the DXY, here's the sort of inflection zone that we're looking at here with dollar CAD. We're there right now. This is the objective September open, not Mike Boutros' opinion, not Jamie's opinion, fact. It's the 618 of the rally, again, fact. Basic trendline support off the lows. Right, so we're basically there now. Looking for inflection here today on whether we buckle below 26 or not. If we hold 26, all things held constant, you still want to be cautious here. That's the inflection you need down to suggest a downside or deeper pullback in dollar CAD. Just for reference, I was looking at this yesterday. If we do break the lows, look where the 100 maps out. Right into the September low day close. So if this is 5 waves up and this ends up being 5 waves down, we don't want to see it, or 3 waves down, we don't want to see it get that low, but that's sort of the risk if we buckle below 26. It's really important to watch how this reacts here today. Seeing the dollar downdraft as it were would basically be looking for the break, but can't pre-play that until it happens. From Canada, we do have core inflation on tap tomorrow. That's expected to come in. I don't have a forecast for it, but previous read was at 3.8%. Forecast here it is 3.9. Okay, so we'll see if that hits loony at all tomorrow. We still got lots of inflation data. Sterling inflation data tomorrow, Canada inflation data tomorrow into the close of the week. Again, you have US retail sales on Thursday and then Eurozone core inflation on Friday. So we're still littered with tons of event risk this week. One thing I would want to know is weekly open resistance here, 2681. If we're going to break, rally should be capped by that. Okay, rally should be capped by that. A downside break from here is 2515, 2525, looking for a zone there. Broadly speaking, guys, I do want to know, we are just treating all of these as near-term pullbacks, right? Broader trends aren't changed, but certainly on the back of that reversal, we're looking to see if we've completed the correction or not. At the end of the day, immediate focus is on this pivot right here into 26. That is number 3, and that is loony. All right, gold. Man, this thing better get a kick soon. It's sitting at support, and it's been in this godforsaken range for way too long. It's been like 3 days. Again, from the top-down approach, gold, I showed you guys this yesterday, really turned from a critical area last week. And on a closed basis, we had cleared 1827. In my mind, on a, that would have been just sheer breakout. Now, we do necessitate the close above the high we close, 1850. You'll see that on all the charts as a level we need to beat. But boy, oh boy, what a turn from resistance. So what does that govern? Is that just the advance finding a little bit of a pullback before we break higher, or is this just straight up range bound conditions? The daily chart suggests that this is sort of an exhaustion pullback, right? Here's the V-shaped recovery off last month's low. Here's former swing highs for July and August. The 618 of the entire drop, the July high day close, building, it wasn't a very strong divergence, but there it was, the failure at 60, right? And in turn lower. My inclination, again, not a trade recommendation, just my humble opinion, my inclination is that you see a pop-up higher before one last low and then resumption. That's just my interpretation of what could be playing with the wave count here. At the end of the day, it's a very tight range. Momentum on the daily charts at 50. You want to respect the break of it, period. Here's what the intraday chart looks like. And here's what I showed you guys earlier this week into the open. So again, dollar CAD levels unchanged, right? We're still failed right at those highs, and we're right back here again. Key support. Here is gold at the start of the week. So we were in this down descending formation. I was looking for a drop into 70.74. I still kind of am. Okay, so that's the 38.2 retracement of the advance that did converge, at least yesterday, on slope support. So you could see a little bit of a deeper pull here. But at the end of the day on this one, very clean weekly opening range, guys. If we break the downside, 1774 downside or downside support, look for inflection there. Near-term bearish invalidation at this point, you could I have it at 1815, but now as we get deeper out into the slope, I'm willing to drop that down to 1805. But there's just so much inflation event risk. And guys, inflation more so than other data is very tends to be very impactful for gold prices, right? What's the historical references for gold as a functional asset is a store of wealth for during times of great distress, so that safe haven trade, and inflation, right, as a hedge against inflation for fiat currencies. So it's going to be interesting to see how gold reacts to the incoming inflation from the UK, from Canada, from the Eurozone. Okay, all this stuff, retail sales still this week. I'm going to sit tight on this one. Again, gunshot approach, pistol to my head. I'd love to fade another low, but there's nothing here that's screaming out any viable operative position. So sit tight on gold if you're not there yet. Any questions on gold? Silver is in a similar scenario. I've been getting questions on that as well. Although that broke uptrend support pretty clearly, the downside seems tired. Here's the 618 of the rally. So again, the range here is 23.27 to 23.86. That's the immediate focus. That's the objective monthly open, by the way, which converges on channel resistance and former uptrend support, turn resistance. Really puts the focus on a breakout above 23.86 if this is going to work. So both of those both caught in a tight range near support on gold and silver. All right, number 6 is Aussie dollar. And here is what Aussie looked like last night. So sitting at support, the big support zone is clustered into the September open. We're driving down into this support zone right now. I'm still looking to see how it pans out. If it breaks, the likelihood for a much steeper drop is there, but that's dollar strength, right? Obviously, today's print not really prompting dollar strength. So at the end of the day, we're still above the support. Recall that we were in the short last week. I bailed out of this super early. The main focus was a drop into 73.36, which we finally got. But as it stands now, I don't want to test this. I don't want to test this. The weekly opening range is set right above support. You don't have any Aussie data of note this week, but certainly we're still coming into some of those major inflation reads. So keep your eyes peeled on this one. We do get employment data. I should stand corrected on that. We do get employment data tomorrow. from Australia. It's actually supposed to be like a pretty bad print, negative 90,000. Unemployment is expected to uptick to 4.9. So we'll see if that has any impact on this one. But till it does, man, the opening range is set pretty clean. Here's what it looks like on the daily chart. Big turn from downtrend resistance, the June lows, 50% of the yearly range. Here's the first bump of support. Again, last month's open. The close lows for July. Remember, this 73.29 level is just so critical. So we're there now. Look for inflection off this range. All right. I guess I'll take a quick segue. I was going to go over Sterling next is on my list, but I'm going to take a quick segue into that previous update on Kiwi, just so we can go sideways here. So here's what Kiwi looks like. And obviously on the other side of the spectrum, Kiwi sitting at the range, Aussie sitting at the range lows, Kiwi sitting closer to the range highs. And here's what this thing looks like. Let me take a step back here. Sorry, go out of order. Here's the Kiwi on the daily chart. So a break of downtrend resistance, that's what we're threatening right now. It's a 3-point touch. 1, 2, 3. The lateral level you would need to beat on a closed basis to mark straight breakout is 72, 72.12. But this is such a critical region, guys. The objective yearly open and the 618 of the yearly range. I'm looking for some big definitive price action if we get up there. Now that's 71.89, 72. So it's, you know, and the 60 pips are from where we are now. I get that, but that's my kind of concern with trying to play along with this rally. Here's what it looks like on the daily chart. Real strong, right? Now, what do you want to do with this? I'm certainly not going to try to press the long, because if this ends up being a throw over, that's going to be the high. I don't want to short there. Same respect, I don't want to buy here, because your only viable stop is basically the weekly low. You're looking at 70.90. It's a 40 pip stop, a little too big for my money. So I'm looking for inflection here to see how this pans out. Again, here's the intraday chart. Okay, for all intents and purposes, we actually did buckle back above the weekly open, but here's last week's open, which was resistance on Friday, resistance on Tuesday, and we just clapped it right now. You know, I hate to give you guys posturing of like this could, if this and this, but honestly, again, my humble opinion here, the ideal scenario for Kiwi is a fade high into 72, like a rip, spike, intraday maybe, spike into this region, and then look for failure. Anything northbound of 72 for the dollar would be like terminal. We're already off, 2% off the lows, 5% off the lows. What am I saying? Way bigger. So it's the game plan, at least by my part, is exhaustion into uptrend resistance. And that's what this is. Here's the near-term chart. I know it's kind of messy here, guys. Let me just clean this up a little bit. You can clear that near-term channel. But turn from uptrend resistance. Even if we rally in there again, it's that slope. There's the 2021 open. There's the 618. Love to see an exhaustion clip there. So interesting play here for Kiwi dollar. Bullet, if we break below 70.90, okay, that's a break of the objective weekly range low. That does shift the focus lower, but this is your bullish inval. If you break below 70.30, 70.40, monthly open 38.2 of the advance off last month's low, that's the median line too. That's what would be sort of the indication or suggestive that a more important high was registered. We got a bigger turn at hand. So Aussie and Kiwi, Aussie's typically my favorite pair. I just don't have a viable setup right here. More so looking for that exhaustion clip on these. Questions? By the way, here's just a quick look at Aussie Kiwi. We looked at both of those. And we saw the inflection, right, with Kiwi really seeing that strength as Aussie still kind of struggling near the lows. Here's Aussie Kiwi at multi-month lows. We haven't seen these lows since back in April of last year. Just check this out real quick. Get out of here. 2 equal legs off the highs right there at 103.20. Watch today's close. Here's your monthly open. Obviously, you see, guys, I don't really follow this trade as closely, but when you get this kind of price action, it's worth paying attention to. It might be an exhaustive trade that you can get involved in, but something we'll reference again. I'm going to jot that down. Aussie yen. All right, or Aussie Kiwi. Next up, here is sterling. I don't even want to talk about this, guys. It's so boring here. It looks like we're breaking the highs. There's not a trade per se for me to get involved in. Here's sterling on the weekly charts. Our whole focus was this resistance, okay? 2 weeks, last week, or I guess into the open of September, we rallied right there, failed. Last week, we turned back, turned higher on this session, but still closed lower. It still had the focus on this downtrend. The question is this going to be a breakout? Because if it is, you got the 618 retracement of the decline off the yearly highs and the 2018 high week reversal close, major level, converging right into the 39.90 level. And that's basically the next upside target if this is going to breach. So sterling is definitely threatening a breakout here. Again, the reluctance you hear in my voice is just because I missed the entry and I'm kind of teed off because we've been identifying this key resistance zone. I was just looking for a deeper pullback. Not getting it. Okay, so look, if this breaches and closes above the objective monthly opening range, which is right around 38.90, one problem I have is just the 100-day moving average at 39, but I don't think we're going to have too much problems there. It could hang things up, but at the end of the day, if this break of the monthly range is legit, yeah, we're looking for 39.90. Initial targets at 39.15. Look for a tag. You can see that that moving average has offered some inflection in the past, but I'm not really huge as at MA targeting. But at the end of the day, that's a soft target. Bigger level still at 39.90. Here's what it looks like on the intraday. Again, nothing to do here if you're not in already. But there was that August open that we highlighted as resistance once, pullback twice. We closed again back below 38.40. And if you guys remember, that was the level we had mapped out. On the daily chart, this would be the first close above. We didn't close above this in this last stretch. Obviously, earlier in the month we did, but not quite here. Here it is. So if you got them, hold them. If you're not holding any positioning here, it might be a decent fade opportunity on a stretch towards 39. I would not go chasing this. Would not go chasing this. Core inflation data on tap tomorrow, 2.9% versus the 1.8 previous read. That's on core for the UK. Any questions on the British pound? Key support at this point, or at least near-term support right here. Remember, this is not only that FIB confluence, it's now also just around the weekly open. The weekly open comes in at 38.30. So that's going to be your near-term support. Bullish inval now raised to September open. Anything beyond that, you're basically looking for the breakdown. All right. A quick segue. That was 6, 7, 8. Sterling was 9. A quick segue into the crypto block. So look, yesterday what I wanted to highlight was both of these, both Bitcoin and Ethereum, were basically trading into support, right? I'll come back to Aussie yen in a moment. Here's Bitcoin. So let me go back to last night's update. So we tried to break through slope support, which is right here. It failed right at the 38.2 retracement of the entire June advance, which basically caught the lows on the dump here on that washout that we had last week. And so it's not a break, right? If we put this into a line chart, guys, we're basically bouncing off of uptrend support. So the question is, weekly resistance, monthly open resistance right here. It's the same, essentially. What is that, as the April lows? Yep. We're around 47.75, 47,000. Key range in focus. I still wanted to highlight a couple things. A, it's pretty much decoupled with the price parallel we've been following since 2018 in time, right? The turn happened well ahead of the turn in the parallel. Same thing with the high. The turn in the parallel happened well ahead of the turn in price. Nonetheless, I just wanted to highlight that the focus right now is on this immediate range. We've been here for 6 days. Again, monthly open resistance, 38.2 support. Look for a breakout. Topside levels, 49,114. 51,000 is still going to be the breakout level again. So I don't think we're out of the woods quite yet. Obviously, momentum turning at 40 here, ahead of 40. These are all things that suggest the broader uptrend may likely remain intact. That said, we got to break this range. Here's what it looks like near term. Boom, boom. Ethereum is in a similar scenario, right? That one came off of the 38.2 of its advance, right? Confluence with uptrend support. So here you have 25% parallel, which caught that low on the washout last week. Here it converges on the 38.2. That's 31.45. Critical support near term for Ethereum. The breakout, 35.97. That's going to be your breakout. So similar scenario, both of those coming off of trend support at this point and holding a really tight range right below the monthly open. These are the breakouts that tend to pay off. They tend to pay off well. So patience pays, focuses on a breakout on both of these crypto ranges. All right, I'm making good time here today. So one more pair that I haven't really been actively trading on, but I wrote about last week, and I wanted to give you guys an update, was Aussie yen. The pullback has been kind of tapering off. Now, if you recall, last week when I wrote about this, the whole focus was, look, we've turned off of resistance. I'm looking for a little pullback. You know what I mean? The monthly open from last month and this month comes in right around 80.43. A 38.2 of the rally comes in right around 80.44. So I still think the risk is for a dump into that region. Obviously, the weekly opening range is preserved, very tight. It's only Tuesday. Resistance along the slope. Okay, so basically, you're looking at like 81.50s. That's a big zone of support for me. I want to see an inflection here off one of these two levels for Aussie yen. So it's a slow burner. It's one of those trades where you kind of need to just commit and sit in for a while, but not my cup of tea. All right, last but not least, it's going to make headlines this week, is oil. I have oil now at the 618 retracement. Remember, I talked to you guys about this in the webinar yesterday. 71.13 is my line in the sand to mark breakout, mark resumption. We've already broken downslope resistance. It was a 3.4 point touch, so it's a legitimate slope. It's been broken. This, all things held constant, if we close at this level, is a breach of the monthly opening range highs, which suggests we look for a late month high in crude. If we breach 71.13, you have some ancillary, interior targets here, but you're basically, looking for 74.20s. I have the May 2018 high at a soft target near 72.87, but this is really your big zone if that 618 gives out. So cautiously looking higher in crude. I think you possibly get maybe an exhaustion strike or maybe just a blow off here for a pullback, but you're constructive above 69.30. Topside breach from here. You're looking for 72.80 and 74.20. Any questions on crude? Here's the interior slopes. Here's what crude looked like on our last update here. So the pullback from uptrend resistance right here didn't quite make it. There's that 38.2. We were looking for a drop into there last week. We didn't quite get the drop. It turned right ahead, and here's the breakout. Big resistance. Big resistance. Okay, that's everything on my end. I can't believe I wrapped that up in half an hour. Not many questions from you guys. Aurelian, Jay, Steve, Ted, everyone in the room. If you have any questions, do let me know. I mean, I guess yesterday there was like over 200 people in the webinar, so I was bombarded. I don't blame you if you guys don't have any questions right now. Things are kind of slow. You have a lot of rent risk on tap, and things are just starting to gear up. So I do think stay nimble. If you're flat or you haven't caught any of these moves, a lot of them are counter trend. So we're likely to get a lot of kickbacks on this. Just wait out these inflation reads to kind of get some of that major event risk off tap. Other than that, keep riding the commodity block. I do think that gold is going to be sort of a tell as we get through these inflation reads. Anything northbound, again, 1805, 1814 is going to be basically a breakout. But until that happens, keep your eyes on all of these opening ranges. All right. Hey, Aurelian says I missed your piece on the euro. So here's a quick update. You know, it's a breakout of the 1823 level was confluence resistance. So 1855, 1866 is the exact focus right now, Aurelian, on the long side. The 618 of the drop and the objective August open both converge on slope over the next couple of days. So I was telling the guys, this is where we're looking for inflection here. Okay, if you're holding longs, an area to clean it up. If you're looking for new exposure, possible exhaustion. But until that happens, wait out this stretch, okay? Jay says, thanks a lot. Have a great day. Hey, same to you. Aurelian says, got it. Right on, sir. Ted, Steve, everyone in the room, I will see you on Thursday. Best of luck trading. Keep it nimble. And again, tomorrow's UK and Canada inflation. On Thursday's US retail sales. So we'll talk about that as the print hits. And I'll see you guys then. Cheers.